Welcome back everyone. This is our weekly gold review. My name is Angelos Zitis and this week's title is Gold Bulls Back in Charge. Price action in the gold market continues to woe investors. After the precious metal performed its strongest sell-off in months during the past week, it stabilized much lower. Even if traders were eager to take profits, it seems that many market participants were not satisfied with gold's price being so low. Thus, another correction was needed and the precious metal has regained some buying momentum in the past days. This report aims to identify and briefly explain some of the most important fundamental drivers for gold's price. We make a start with the USD, as the currency tends to keep an adverse relationship with the precious metal. The greenback has been in a continuous downfall for the past 4 months, which has equally supported gold's price and has even sent it to new all-time high levels. However, due to the fact that the dollar's weakness persists, some traders or investors may be starting to lose faith in the greenback's ability as a safe haven currency and could be considering other options. Gold traders booked significant profits in the past week by closing their buying positions. Yet, with the economic circumstances in the US being so fragile at the moment, investors may have no other choice but to return to gold once again. Moreover, lately we had another occurrence that may have influenced gold traders to regain buying positions. Very surprisingly, Warren Buffett's Berkshire Hathaway buying a stake in a major gold miner could be the news that any gold trader would like to hear. The move was translated into various speculated opinions as to why the greatest investor of our times is finally turning to the gold market. Some analysts believe that the difficult time we live in may have forced Berkshire to embrace gold and its ability as a safe haven. Another way to see this is that Warren Buffett has chosen to protect his interests with the traditional method of buying gold, indirectly saying the economy could be doing worse than most market participants believe. Then again, Berkshire Hathaway's new 20.9 million share investment in one of the world's largest mining companies, Barrick Gold Corp, is not in reality purchasing or speculating on gold, but rather in shares. However, some other traders and investors that follow the gold market may be intrigued by the news. On a separate note, we must also view the relationship between the US and China as a reason for uncertainty or opportunity from an investor's perspective. Headlines of an aggressive stance towards each other could favor the precious metal's price, while positive developments on the trade deal, with more purchases of goods taking place, could ease worries and weaken gold's price. As a final note, we would like to suggest some upcoming events and financial releases that could move gold's price and traders should keep in mind. Tomorrow, the 19th of August, the FOMC meeting minutes will be released. Insights on how the US Fed views the economy is important and headlines could create volatility. On the 20th, we get the US initial jobless claims figure, while on the 21st, we get the PMI releases from many countries around the world, including the US. On the same day, we also get the US existing home sales figure, and we would like to advise caution trading on the 21st, as volatility may rise substantially. Moving now to our technical analysis, this is gold's 4-hour chart. Now, currently gold is trading just above the 2000 round number threshold between our S1 1995 support level and our R1 2020 resistance level. If the precious metal has room to climb even higher, then the R1 2020 level last seen on the 11th of August could come into play. Even higher, we have also noted the R2 2045 line and the R3 2070 hurdle as possible targets for traders to keep in mind. Yet, if gold's price is overtaken by a selling momentum, then the S1 1995 support level could be tested first. Lower, we have also noted the S2 1970 line as a possible stop point, and even lower the S3 1955 line as our final support hurdle, and could show up in an extensive selling run. Please note gold has moved higher for 4 out of 5 last daily sessions, which in our view indicates the bulls have regained control after last week's steep drop. The RSI indicator below our 4-hour chart is reaching for the 70 level, possibly implying a buying interest is currently displayed. Now, this is the end of this report. We hope you enjoyed it. Thank you very much for your time. From me, Angelos Zitis, and everyone here at IronFX, we wish to you solid trading.